But number one, really the economy that has been growing relatively well last year, as we entered into 2015, when QE ended in US, although Europe and Japan continue to pump liquidity to the system, we have seen weakness in the emerging markets, whether it's Brazil, whether it's Russia, and today in China. We have seen weakness. And today the weaknesses that we've seen in the emerging markets has finally moved its way back to the developed markets, and we've seen very weak data, whether you are from US or from Germany. Economic data has been a disappointing figure, generally across the world. The only thing is that it's not into a recession mode. It's into a mode of slow growth. But there's something that we had talked about it in the past, that growth globally continues to struggle. I do not want to phantom the thought one day. Today, as I talk, people are starting to ask, will there be QE4? We had QE1, withdrawn, failed. They have QE2 in US. They have QE3 that's supposedly to be a lot more innovative because QE3 would not be withdrawn until the economy recovers. But as a whole, and it was only taper off very slowly. So they thought they did the right thing. Let the economy find a better footing before we slowly remove the quantitative easing. And suddenly today that has been withdrawn, and today we've seen weakness again in the US economy. The thought process is maybe now we need QE4. But I'm not sure how many more QEs do you need? The question is, does QE really work? And there are some nice pieces of reports I read by very brilliant people who write them, and they suggest that despite having all this quantitative easing, productive growth in the world remains extremely low. And the growth phase that we're going to face, we have to face the reality that the growth of the global economy will continue to be at subpar. And you will still have to accept that your expectation of returns remain on the low side. So will QE really work? Answer is that nobody knows. The Fed, the ECB, the BOJ hopes it does. But in reality, it does in the short term. It does when liquidity starts pumping in, when markets started will respond to those liquidity pumping. The economy does rise. However, it cannot sustain. Each time when they turn off the tap, the economy starts to weaken again. And the same can be seen in Eurozone, the same can be seen in Japan. And I would not want to phantom the thought that one day, when they announce QE4, or they announce another quantitative easing, the markets say, this is a bluff. We've been through it before and it doesn't work. They must think of something new. And the way markets behave is in this manner. The more similar things they see over and over again, the more repetitive events happen over and over again, markets will be smart enough to discount. And I think today, as we look at the US economy, expecting an interest rate hike, and that's what the market expects. But if the data points continue to remain so weak as we've seen the last few weeks, chances is that it's actually the reverse. Chances is that they may raise interest rate once and then they have to then take it down again. Chances is that they may then have to keep rates zero for much longer time. In fact, the other extreme expectation, which market has not fully discounted at the moment, is that they may then start to think about having another quantitative easing if the emerging economies continue to weaken and that weakness translate and transfer to the developed economies. At the moment, we are not in recession. We are not. We are in a period of very slow growth. The only disconnect is that valuations of equity markets are not cheap, especially the developed markets. And that's where the market is trying to grapple, slow down growth, economy, the earnings cycle is weak. Then you have markets continue to rise, and that's why managers are stuck as what to do with this type of environment.